Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com, and welcome to Earnings Call. If you are not familiar with what we do here, each and every week we talk about stocks that have upcoming earnings. And not only do we talk about those companies, but we talk about how to profit from those company earnings. Okay. Stocks or companies make the stock of those companies make certain movements around earnings, and we talk about how to profit from those right here each and every week. Now, this is the week. This is Monday, July 7th of 2025. This is a quiet warm up to the second quarter of earnings that start next week. So the second season of earnings starts next week with JP Morgan and some of the other banks declaring earnings, but that's still a week off, so we'll talk about that next Monday. So although this week offers limited data, it's still meaningful, and there is some large cap names that we really need to pay attention to. So these are going to be key sectors that we want to pay attention to, and I'm going to cover those names right here. So sit tight. Not only will I review our current open position, but I got a new trade for you, and we will also see what last week's trade did, and you will want to see this. So stick around. We're going to get going right now. All right, so as we start this week with earnings, as you can see here, we have a limited list. I'm only looking at about 9 stocks or so for this week, but there are some significant names here, as you see. Now, the way this sheet is broken out is on the left-hand side in the vertical column, we have stocks that are potential breakout candidates. What are breakout candidates? These are companies that tend to move greater than 10% after their earnings announcements. Okay. And we're talking immediately after. On the right hand side of the ledger, we have what we call quiet companies, stocks that just don't really move through earnings. These are mostly large, well known names that just don't tend to move after their earnings announcements. And you may be familiar with one or two names here on our quiet list, a few more on the breakout list. But again, remember, in the upcoming weeks, we are really going to get cooking on the number of companies having earnings. So you'll want to be sure and tune in for the next 6 to 8 weeks, definitely, as we go through the second quarter of earnings announcements. But here's our list for this week. Let's begin with the quiet stocks. Here's an example of Pfizer. Okay, this has an average move of about 4% each and every earnings cycle. Now, Pfizer does not have earnings this week. Okay, this is just an example. As you can see, this stock is already a quiet stock. The stock just does not move very much. But even through the earnings announcements, it moves even less, averaging, again, less than 4% of a move through those earnings cycles. So, what do we have on deck here? Well, we're going to start with a furniture company that you all may be familiar with. It's Bassett Furniture. You may or may not be familiar with this company. Now, this is a relatively inexpensive stock at $16.56 as we come on air today, but they will have their earnings on Wednesday after market close. That's going to be Wednesday, July 9th, after market close. And the average move here for Bassett is less than 6%. Okay, so you can see that there's just really not much movement here. This is a pretty quiet stock. In fact, since we are option traders, I usually like to change my scaling over here on the right to $5. Why $5? Well, because historically that's where strikes were. Okay, not recently. Many stocks have dollar strikes, but back in the day they had them every $5, and it's just an old habit of mine. And you can see just how quiet this stock is going through earnings. So we don't expect much from Bassett, a little less than 6%, but they are a retailer, okay? And they are a furniture in the furniture space. And so that will help give us some good indication of the health of the retail consumer as we go through this period where tariffs, and today, July 7th, tariff letters are going out. Actually, they went out 57 minutes ago, okay, to a bunch of countries saying, here's the deal, come to the table, or here's what you're going to be paying the U.S. So this could really start moving markets as we get into the next earnings cycle, okay? Next on our list is going to be ConAgra, all right? This is in the food space. and we see a stock that really has sold off. This stock was up in the $30 range earlier this year. If I go back a little further, you'll see that one of their last early actually last fall. You can see just below $30, but before that, you can see last October up at $30. So this stock has really been under pressure. And as we come to today's earnings date, actually, they will have earnings on Thursday, July 10th, before market open. So in the morning, the average move here is less than 6% as well. Now, ConAgra, we still might be able to get a trade off. What type of trade do we do? Well, as option traders, we usually like to sell premium on these types of stocks because the stock doesn't move very much, but the options are still pretty expensive as we go into that earnings announcement. And we like to sell premium through strategies like an Iron Condor. And if you're not familiar with what that is, it's essentially selling a call spread and selling a put spread combined together, and that creates something called an Iron Condor. So you're just selling two spreads, one call spread, one put spread combined together, and you're looking to capture the non-movement of the stock. All right. Now, to close out our quiet list for this week, we're going to look at a very familiar name to most of you probably, and that is WD-40. Yes, this is a $230 stock. Okay. It is a very pricey stock. Now, this does have a bit of movement through their earnings, but they are on my quiet list because the average move for WD-40 is a little less than 9%. In fact, the previous earnings announcement that you see here, this back here in April, that's an 8% move. Okay, so even though it looks kind of volatile, you can manipulate your charts and just kind of condense it down and put it into $25 ranges here because this is a $230 stock. All right, and you can see that it is pretty quiet. 250 on the top, two little below, maybe 220 on the bottom as average, or 215 as a low. And that may seem like a big range, but no, it's really not. So we're looking at an average move of less than 9%, and you can definitely get a nice Iron Condor off on this type of stock. Okay, love these pricier stocks, in the $100 to $200 range because there's lots of options and they're usually pretty expensive. Great for trading these strategies, and a WD-40 is there. So let's move on here a little bit, and we're going to talk about what everybody loves to pay attention to, and that is our breakout candidates. Okay. These are often very exciting. They provide lots of action, and people that trade these strategies around our earnings definitely love to pay attention to these. Here's an example of one of those. This company does not have earnings this week, but this is Akamai. Okay, stock symbol AKAM, and you can see the difference here between this and Pfizer. This stock moves. This is a big mover around earnings. It has a lot of volatility, double-digit moves each and every earnings cycle. So you can see that this stock last earnings cycle went from $85 almost down to $75 in a blink of an eye. Okay, so big drops. The previous earnings, it went from around $100 down to $78 in one day. So it tends to move like that. And this is an example of these breakout stocks. So we trade a little bit differently with these. We trade what we call straddles and strangles. This is where you buy call, buy put. If you do it at the same strike price, that's a straddle. If you do it at two different strike prices, one for the call, one for the put, that's a strangle. And we do these. And here's our candidates for this week. Starting tomorrow, nothing going on today. Quiet day today on a Monday, which is unusual. But tomorrow, we have Air and we have Penguin Solutions, and then nothing on Wednesday, but Thursday, we actually have a pretty big day. We have actually more stocks that are breakout candidates than you see here. Okay, we have Helen of Troy, Delta, and Levi's. Let's talk about these stocks here coming up. So we're going to start with Air here. AEHR. This is Air Test, and this is a pretty inexpensive stock at $15, but this is a mover. Their average move is 15%, greater than 15%. Okay, so this stock will move on you, and unfortunately, the options are often priced right in that average move range. So that is a challenge, but every now and then there is a little bit of mispricing. Prices will be priced for these trades will be priced a little bit under what the average move is, and that is where we have our edge. So Air has earnings on Tuesday, and sorry, that date is correct. Let me get that updated. It's going to be on Tuesday. AEHR. Let me just double check and make sure it is aftermarket close on Tuesday, the 9th. So let me update that there. Earnings on Tuesday, 7/9, aftermarket close. And again, the average move is 15% right there. Okay, so moving on from Air, we have one of my regulars here on the breakout side of things, and this is Helen of Troy. Okay, now Helen of Troy is a mover. In fact, I mean it's down 6% today, but they have earnings on Thursday, July 10th, before market opens. The average move here on Helen of Troy is 20%. 20%. All right. So if you're getting a price where you do a straddle or a strangle, and your upside break even is about 12% away, and your downside break even is about 12% away, that's actually a deal. Okay. Because the average move is around 20%. And we look for, again, a big move for Helen of Troy. And, you can see around some previous events, these gaps are usually earnings that you see. Now, this was an earnings event down here, and it did not move its average move, but within 3 days, it moved well beyond its average move. I mean, our earnings was right here. Boom. That was the last earnings event, was right there. I happen to know that because I had a trade on it. And just look at this. 3 days later, it just, and that's about all we hold it. So, yes, it's kept going down. And it, in hindsight, it would have been great to hold on to those puts. But we just held on to them for about 3 days after the earnings event and had a very nice trade out of Helen. Okay. So keep your eye on that. Then the bellwether here, Delta Airlines, really coming into a lot of attention, given a lot of attention this week, because we are at the end of earnings season before next week's start of the next cycle. And Delta, we're going to get probably some insight into their 4th of July traffic and how much people have been traveling through the holidays, like over Memorial holiday weekend, and then over the 4th of July. Now, 4th of July may not be totally included, and they may not have that data, but they're definitely going to have Memorial Day, and we'll see how earnings play out here. So Delta has earnings on Thursday, July 10th, before market open, and the average move here is 11%. So that's pretty decent for a $50 stock. As you can see, it's trading just below 50 at 49.47. I like the current pattern where it's just consolidating in a nice tight range, and then any move of normal should get a nice profit. So if I see a straddle or strangle that where my break evens on that on a straddle or strangle are around 8-9%, I would definitely put that trade on. However, if they're coming in, the average, if the move is 12%, meaning my straddle or strangle takes a 12% move, then I wouldn't do the trade. It's actually priced very efficiently. So you got to pay attention to how the options pricing is versus the current pricing of the options in the market. So hopefully that made sense, but there is an average move and then there is an expected move. And man, option market makers are some of the best in the business at estimating moves of stocks over a certain period of time, including one day. Okay. They're very good at it. All right. We're going to close out, the list. And I have one more that we'll look at that's not on here, but Levi Strauss. Okay. Levi's has earnings on, and again, I'm not sure why my chart didn't update, but let me update that for you because Levi, it's going to be Thursday as well. Just want to make sure it's before or after market close, and it is after. So July 10th, okay, after market close, and the expected move or the average move. Let me edit that because I've updated all these to talk about the average move because the expected move changes right up to the date of the earnings announcement. Okay. So the average move here is greater than 12%. All right. So, here you have a $19 stock. It is melting higher right now, along with the rest of the market. Yes, this is today, it's up 1.57% so far through about half a day of trading, even though the market's down. And so it's having a pretty good day, but earnings are coming up. So you have a stock that's about $20. But I would think by Wednesday or Thursday, and then you have the earnings announcement. So I would look at something like the $20 Strangle, or if there's half strikes, then I haven't looked, but maybe the 1750, 2250, something like that. Again, price it out, see what it's going. And then the last stock that I want to look at that did not make my list, and I'll tell you why we're going to look at it, is Berna Technologies. Now, Berna typically is a mover, and let me just check and see what the current estimated move is. Okay, so the average move here is 15%. All right, believe it or not, for this stock, this is a $33 stock. Now, Berna, they're not your typical technology company. They make handheld launchers of pepper balls and really hard balls, and they're launchers. Okay, not guns. They're non-lethal. Okay, and they definitely do some damage. I mean, they while they're non-lethal, you will suffer being hit by one of their pepper balls. Let me tell you. And always an interesting company to pay attention to. But they have a move, and I like the consolidation that we had here. It has moved up, testing the top of the range right now, but earnings aren't until Thursday after market close, and Berna is definitely a stock to watch. And we will talk more about that in just a moment. All right. So we talk about several stocks here. We talked about a handful today. So we do have the chapter feature at the bottom of our videos for you to kind of jump ahead if there's a particular stock you want to review. Okay. Again, these last four stocks, definitely, or five that we talked about, including Berna, those are breakout candidates. Okay. Air, Helen of Troy, Delta Airlines, Levi's, and Berna. These are all breakout candidates. So they're all for Straddles, Strangles, that sort of thing. And then ConAgra, WD-40, Bassett. Those are quiet stocks where you might sell premium going into the earnings for those. All right. So what do we have for you? I just jumped over and just double checked my chart, but I have them on the screen for you as we take a look at our current open position. So this is where we talk about trades that I give out each and every week on the channel. All right, and we are going to start this week with a trade that we've had on for a little while. Okay, and that is Daktronics. Okay, so Daktronics, this is the current situation with Daktronics. It has rallied actually very nicely, and it is testing our upper break even in the trade. Now, it is down just slightly today. So we are down $22 in the trade. Now, believe it or not, that is 11% because this was a very inexpensive trade. It was about $190 or so. So we are down just $22 in the trade, and we are looking for a little follow through here. We still have 13 days left in the trade, and fortunately, those are full trading days. No more 3-day holidays until Labor Day here in early September. So we are in the clear. We got full trading weeks and plenty of time for this to continue its rally and go up into the profit zone. So we will look for that. So this currently is a hold. Okay, we're going to hold on to Daktronics for now. But what did we do last week? All right, well, last week, if you recall, we did Greenbrier Companies. All right, now this stock is also on my kind of list of favorites. Believe it or not, this is a railroad car maker, amongst other things. And you can see the tight consolidation going into their earnings announcement. And we gave this trade out last Monday. They had earnings at midweek last week. Let's see how they did. Okay, so earnings came out, and believe it or not, that wasn't 7 days. That was just 3 days that we had earnings. And look at that, 141% return on earnings last week for Greenbrier. Okay. And in fact, if you've held on to that until today, you were still up about maybe about $500. You haven't lost much, but as that stock had its earnings announcement, it moved up, just as we expected, a big jump. The Strangle exploded in value for a profit of $570. That was 141% return on risk. And with us, really anything that is a triple digit return, especially in just a couple of days, that's a home run trade. And this is a home run trade. Okay. Just think, being in a trade for 3 days and you've made over 140% return on your money. That is typically what happens with these breakout stocks when they move. Okay. Sometimes the breakout stocks have trouble moving, but in this case, Greenbrier did not. Okay. So what's on tap for this week? Even though we have a quiet week, only a handful of stocks that are declaring earnings, we still do have candidates each and every week. All right. So remember, earnings again start next week for Q2. I will be here on Monday. We'll go through the list and we'll kick off with some of the banks as we always do on the earnings cycles. But this week I have a trade for you on stock that I just talked about. So our trade for this week is on Berna Technologies, and this stock is setting up really for it's skewed towards a bullish move because of where the where the options strikes are. And we didn't really have a choice. We couldn't. It does not have dollar strikes, so we did a strangle. That's what this is called. Where the if you focus on the black line here, at the flat bottom that's on the left hand side there of that risk graph, that tells us that this is a strangle. Okay, and you can see here that whether it moves up or down, as long as it moves its historic average, okay, which is 15%, will be in good shape on this particular trade. And this is a relatively inexpensive trade. It's only about $200 and change. So this is, let me see here what the updated number is. Yeah, $250 for the strangle. And so our debit would be $250 or less per strangle. So if you have a bigger account, you did 10 of them, that's $2,500. Okay, that's how that works. So just add, if you did 2 of them, that's $500, etc. As you go on up. So you'll just keep on running that up. The more strikes you have, the more expensive it gets. But you boil it down to one single strangle, it's $250. And so even smaller accounts can do this type of trade. So that is our show for this week. We do this each and every week. I usually have a free gift for you, and today is no exception for you visiting our channel and visiting our show. And if you like what you're seeing, please like and subscribe, because I do this each and every week talking about earnings. Here's the free gift. It's at ewotrader.com/straddle. And I will show you exactly how to do these breakout type of trades around stocks that have earnings, specifically around earnings events. So each and every one of you, please have a great trading week. And I will see you right here again next Monday, same time, same channel. Everyone have a great day. Take care.